It's another brand new week. Welcome to Business Morning. I'm Chimezie Obi Iwago. Thank you for joining us. We'll start off with global oil market update. Prices dipped this morning as rising coronavirus cases upset hopes for a smooth recovery in fuel demand, with the main crude benchmark on track for their first monthly falls in multiple months after last week's slip. Brent crude fell 23 cents to $41.69 a barrel after dropping 2.9% last week. U.S. West Texas Intermediate was at $40.04 a barrel, down 21 cents following a 2.1% decline last week. Brent is on track to fall for the first month in 6, with while WTI is headed for its first monthly loss since April, as the reimposition of mobility curbs in some countries clouds the outlook on fuel demand recovery. More crude is also being exported from OPEC producers Iran and Libya, despite efforts by the Organization of the Petroleum Exporting Countries and their allies to limit output. Last week, U.S. energy firms also added oil and natural gas rigs for a second week in a row. Still, OPEC Secretary General Mohammed Bakino said on Sunday that commercial oil inventories in OECD countries are expected to stand only slightly above the 5-year average in the first quarter of 2021 before falling below the level for the rest of the year. In the meantime, the Lagos Chamber of Commerce and Industry is asking trade unions in the country to call off the strike action after suspending it today over the increase in electricity tariff and petrol price hike. A statement by the Chamber on Sunday stresses that the industrial action is not healthy for the country owing to the difficulties facing the federal government. It adds that the economy is currently struggling from the devastating shock caused by the COVID-19 pandemic, which has caused a 6.1% GDP contraction in the second quarter of this year. The LCCI states that the yearnings of labor should be managed in a way that the downstream sector will have huge private investment to reduce importation of petroleum products, as well as the power sector to guarantee steady and affordable power supply. The LCCI urged the federal government to put more palliatives in place to cushion the effect of the fuel price hike and the eventual increase in electricity tariff. Well, the quest for Nigeria to be an industrialized economy with high sustainable growth rates has been the preoccupation of every administration that has piloted the affairs of the nation since after independence. But amidst all these struggles for sustainable growth, the Nigerian economy has performed poorly since the late 1970s, resulting in stagnation and increase in poverty levels. Industrialization was seen as the only feasible means to get the promised land by breaking the shackles of poverty because of the expected spillover effect in every other aspect of the economy. Despite all efforts since October 1960, the level of industrialization remains very low, even with the oil boom that comes intermittently. And as Nigeria prepares to mark its 60 years of independence, our focus today is on the manufacturing sector. The sector contracted by 8.78% in the second quarter of this year, contributing just 8.82% to the second quarter GDP. Nigeria's PMIs remain in contractionary territory. According to the CBN manufacturing PMI for the month of September, that stood at 46.9 points from 48.5 points in August, while the non-manufacturing PMI stood at 41.9 points from 44.7 points in August. Well, joining me now to look at this sector as Nigeria marks its 60 years of independence is the Group Managing Director of Flour Mills of Nigeria, Mr. Paul Gbededo. Thank you very much, Mr. Gbededo, for joining us on the program. Good morning.
Thank you very much, Ms. Thank you for having me.
You're welcome. Now, Nigeria is celebrating its 60 years of independence this week. How would you describe the manufacturing sector where you have operated for several years, 60 years after independence?
Incidentally, Flour Mills of Nigeria is also celebrating its 60-year independence tomorrow, 2 days ahead of the country. So we have been here since the birth of the country, Nigeria. And we have been in this manufacturing sector right from the outset. It is important, as a background, to know that manufacturing is about value addition in order to create jobs and create wealth for the country. And manufacturing has had a kind of a mixed bag, over the last 60 years. You can look at the last 60 years in two parts. Probably the first 30 years and then the second 30 years. The first 30 years from 1960 to 1990. Percentage manufacturing to the GDP of Nigeria, moved from about 4% in 1960 to about 11% in 1990. The best year being 1985. Then from 1990 to date, it has also moved from about 4% to maximum 9%. The worst year being 2011, when it was around about 4.2, 4.3. So it has been, a mixed bag, and many manufacturing companies that you had in the first half from 1960 to 1990, some of them are gone. We don't have them today. But some who have, withstood the challenges of the time, they have grown. Like ourselves and many others, we have grown to become larger than we were at the beginning of independence. So,
Now,
like I said,
Mr. Benedor, you having succeeded all these years, and yet some others are complaining about the challenges they face. Of course, we know that every administration in Nigeria tried to industrialize the country, but to no avail. Now, while you share your success story, what are the key challenges of this sector?
let us first of all know that it is the responsibility of government to create the enabling environment for manufacturing to really thrive in the country. And I must say that from one government to the other, there have been several different focuses on manufacturing sector. Some have been successful and some have not been that successful, depending on the time. But the fact still remains that it is government that enables manufacturing, to be thriving in any country. So if you look at the challenges that are faced by manufacturers or investors, you think of the policy. Once government focuses on a sector like manufacturing sector, crafts the policy in such a way that the policy is inclusive, is enforceable, is sustainable, then it gives comfort to the investor to be able to invest because investor wants an environment that is predictive, a policy that are sustainable, not one policy today and another one tomorrow. That is very, very critical, and it's a challenge in Nigeria. Second one is infrastructure. Government needs to provide infrastructure, but we know, we don't need to belabor this issue. We know our situation. So investors also and manufacturers, they have been very creative in ensuring that they join forces with government to provide certain infrastructure. But if you look at power issue, because while big organizations, can join forces and develop some infrastructure, you want to think of the SMEs who are not that strong, to be able to provide even basic infrastructure. So government, needs to look at the issue of power, the issue of roads, and the issue of rail, to really support the growth of the SMEs, medium enterprises, and also the larger corporations. Then the third challenge, faced by manufacturing sector is funding. Of course, things are, improving, by time, especially in this, COVID climate. We have seen funding, cost of, fund come down, significantly. So that has been very helpful to both the SME and the larger corporations. Then the fourth challenge that is very uh, important is the challenge of human capital development. We need to ensure that we have the right uh, human capital that will drive manufacturing. We need to have education that is fit for purpose. We need technicians, we need plumbers, we need fitters, and so on. Those are basic needs of manufacturing. And if we are not focusing on developing this kind of human capital, we will continue to struggle in the space of manufacturing. Of course, we also need to build capacity in the industry so that we move from just the medium scale to larger scales and be able to create job and create wealth in the manufacturing space. Of course, government needs to give waivers. Government needs to give tariff. Government needs to build manufacturing hubs, manufacturing parks, so as to enable manufacturing to thrive. Even if we cannot have made in Nigeria, products, why don't we have make in Nigeria? Incentivizing people to come, with their capital, produce things in Nigeria, and then get them out of Nigeria. That's making Nigeria. But we would have provided jobs, for people. So it is the role of government, to really ensure that the environment is enabled, so that manufacturing can continue to thrive in the country.
Now, as part of this present administration's effort to encourage local production, the CBN restricted some items from accessing the FX from the official window. How has that policy supported the sector growth? How much of backward integration have manufacturers implemented? Because some analysts will have accused the manufacturers as being too dependent on imported raw materials, and this is why many of them are not competitive.
Well, it is true that as much as possible, we should direct our supply chain, inbound supply chain. We domesticate our inbound. And that is when we have a real proper value addition to what we produce, probably from the agri sector. You add value and create jobs, create wealth. That is very important. Also in the mining industry, in the oil industry, and so on, it's important that we use our local raw materials, to ensure that we add value, and create wealth. The situation we face ourselves is such that we do not have, enough of these, local raw materials, and therefore, from history we have been importing things that we need as addition to what we can source locally. And once you are bringing in raw materials from offshore, you need foreign exchange. And in recent times, we have seen what has happened to foreign exchange in the country. And therefore, in the wisdom of CBN, they have had to manage what we have, so that, the country can, keep going, be able to pay its bills, and not having to, accumulate loads of debt, in order to continue in the manufacturing end. So we have seen some policies, financial policies, monetary policies that CBN has come up with. And to some extent, it has stabilized things a bit. But don't forget, those who are highly impacted were the medium scale, small scale, medium scale industries that are supposed to be the engine of the economy. So they were highly impacted. And that is something that we need to review, so that we can start incentivizing small scale, medium scale, and of course, large scale industries to continue to produce, and add to the GDP. Because you have to focus on manufacturing to create jobs. In the developed world or the developing world, that's what they focus on, and we are not different.
All right, now you're talking about the MSMEs. In recent past, the idea of industrial clusters was touted as the way out for industrialization. What was the impact of this cluster policy?
I did get your question well.
Talking about the MSMEs, yeah, I was asking that in the past, I mean, government talked about industrial clusters, all right? So what has been the outcome or the impact of this policy, the cluster policy?
The policy is a good policy. I talked earlier about federal government creating industrial hubs, industrial parks, and industrial clusters, so that it's like a one-stop shop, linking raw materials to processing, linking processing to marketing. That is what we need to really focus on. It's very important, and therefore, government can be able to provide infrastructure that will be used, by the industries or manufacturing, companies that are in that kind of industrial park. But we have not been able to execute properly these industrial parks. In fact, subnationals, that's the states, are trying to build their own industrial parks now, and we are waiting to see, how this works. Probably federal government, in its wisdom, has allowed these, subnationals to go ahead and start developing their industrial parks, so that from state to state, based on the raw materials, available in such states, companies can be able to be in such industrial parks and be able to operate and contribute their own quota to the economy of the country. It's very important that it is done, because instead of isolated companies all over the place and not having enough infrastructure, to support companies that are widely, apart. Once we have them together, it can be easier to support them with policies, support them with infrastructure, support them with funding, and others. So it's
All right.
important we focus on the industrial clusters.
All right. Yeah, Mr. Benedo, we have just less than 2 minutes to wrap up this conversation. Now, COVID-19 is here, so we have new normal to live with. With this new normal, what is the way forward, particularly, as we face this situation?
Yeah, the COVID pandemic has really changed the way we think, changed the way we work, and changed the way we act. Particularly, because of the lockdown to prevent the spread of COVID, it has enforced, if I may use that word, it has enforced, a change in the way we look at operations, especially in the services. We see people now working remotely, from home or from wherever they are, supporting their businesses, not necessarily being on the site of the business. That is one aspect. We have also seen that COVID has disrupted supply chain, for instance. It disrupted supply chain that, those countries that, you import your raw materials from, the countries that you import your spare parts from, countries that you import your machinery from, they're not able to move. So
Okay.
it has helped to smartly create optimization and efficiency and production in what we have. And that is what it needs to be. That's
Okay.
what, manufacturing needs to be focusing on, optimizing what you have and then creating the future.
All right. Thank you very much, Mr. Paul Wededo, the Group Managing Director of Flour Mills of Nigeria. Thank you for your time on the show.
Thank you very much.
We'll take a break now. When we come back, we'll look at the issue of cryptocurrency regulation in Nigeria. Just stay with us. Well, the Securities and Exchange Commission has been speaking about the regulation of virtual and digital instruments such as crypto assets by foreign and domestic issuers in the country. The SEC, in a couple of statements earlier, directed individuals and corporates to commence the registration of their virtual activities, including digital asset offerings, initial coin offerings, security tokens, and other blockchain-based offers, while also confirming its readiness and capacity to regulate the space. All right, to give us an investment banking perspective of this regulation in Nigeria is the head of research at AfriInvest Securities, Biodu Keribe. Good morning, Biodu. Thank you very much for joining us on the program.
Good morning, Chimeze. Thank you for having me.
So what are investment bankers like you learning about the regulation of cryptos by the SEC?
Yeah, good question. I think one amazing thing that has really emerged over the last 2 decades, really, that has changed the course of humanity is the internet. And in the light of this, we saw Satoshi Nakamoto, created the Bitcoin in 2009, a way for computers to communicate with each other on behalf of humans and, sort of carry out financial transactions without any sort of central authority involved. And in the last 3 years, really, we've seen a massive adoption globally and locally in terms of around cryptocurrency, both from individuals and corporates. They're really adopting it as a store of wealth and value. It's sort of a digital coin or digital gold as it is. A Bitcoin exchange somewhere puts Nigeria's transaction at about $200 million on average every month, which sort of competes favorably with volumes you see on traditional asset classes. So in the light of this, it then becomes compulsory that regulators around the world, both central banks, Securities and Exchange Commission, they come together and sort of think around this product and put a bit of a regulation. The initial design was to have it very centralized with no central authority regulating or controlling these asset classes. But the moment you have retail investors, average individuals, putting their money in it, storing value in it, then it becomes compulsory for the regulators to come in to sort of look for ways to provide a bit of regulation around this. And this is what the Securities and Exchange Commission Nigeria has come up to do. A way to protect investors, basically act in the best interest of investors to promote transparency due to the increased adoption of innovation and participation and activity.
All right, Biodo. If I may ask, now that fixed income yields have hit the floors, are crypto assets being considered the next money spinner for investment bankers like yourself?
Interesting question. So, yeah, while I acknowledge the fact that fixed income yields really are currently at low levels and the need for alternative investment opportunities is more pressing than ever, it is critical that we should know that trading or holding, cryptocurrencies or crypto asset comes with its own level of associated risk, and we would remain on, we're still sort of remain on the sideline with respect to the level of adoption and the level of integration for asset managers of this for this currency. We'll sort of continue to monitor development, and I think it is in the light of this that we've seen the SEC come up with this regulation that sort of provides two major approaches, such that initially there has to be an initial assessment for any issuer, anyone that is sort of promoting the asset in the Nigerian capital market. They have to carry out an initial assessment. Then after this assessment, the person would have to go through a proper regulation process, getting fully registered. So these guidelines, I believe the SEC also will sort of improve the quality, the content, and the dimension of this guideline as time passes on.
Now, if investment bankers and other fund managers begin to consider crypto assets as alternative investment outlets in Nigeria, what's the status of their local capacity for transactions?
So like I said, if within the investment, space for investment asset managers, really, the adoption of cryptocurrency is still really, really, probably almost non-existent, right? If we look at the level of transactions we see, both at the bond market, at the equities market, I will sort of proxy that or compare that with the level of transactions we see the crypto side of the investment space or the trading space. We see an average of 200 million transaction on average on the crypto side. Compare that with what we see on the stock exchange in terms of monthly turnover, or the fixed income turnover. You can see there's still a massive gap in terms of that. And why you will see this gap is because of the sort of structure of economy, the fact that we sort of go through some sort of currency adjustment or devaluation from time to time, and people, even non-investors, are interested in preserving their wealth in an asset or in a sort of a currency that can hold value. And that's why you see that sort of quantum transaction on cryptocurrency. So, speaking to the capacity of asset managers, first of all, the infrastructural network in terms of technology that is needed, I don't think most of them have it in place at the moment. I think it's something they have to begin to build capacity in before we then look into the funding capacity.
Now, from the vantage point of securities regulations in Nigeria today, is there a possibility of having pension assets investable in crypto assets?
Okay. As we both know, right? Pension assets really are a highly regulated terrain. They are a highly regulated business, right? And at the moment, I would think it's no. Based on current status quo, I would think it's a no. It's highly unlikely we see PFAs come into the crypto investment or the crypto asset place at the moment. And this is because they are highly regulated, and much emphasis is placed on the sort of asset classes they invest in. Even at the moment, right, their investment into stocks is the allocation you find them put into equities is not as compelling as you find them put into other traditional assets such as fixed income instruments. And for cryptocurrency, they are classified as highly risky asset class, just like stocks, and that's why the adoption would not be so swift. Will not would likely not even see that adoption anytime soon.
So, what do we know about crypto assets regulation in other climes? Is it regulated by the SEC or the CBN?
To begin with, right, laws governing crypto industry vary from state to state and federal authorities to federal authorities, and they also interpret and regulate them differently. What I know for sure is that as of April 2010, right, we have about 10 countries that have come up to make announcements regarding cryptocurrency and cryptocurrency regulations, right? And these countries include Japan, Malaysia, Singapore, China, Spain, Germany, and maybe the Philippines. I think the US and also South Korea. The regulation country to country and state to state really vary. We're seeing some level of regulation coming on, but the pace is still pretty much slow. And this is because the initial design for cryptocurrency was to have it as a centrally decentralized sort of platform for financial transactions. Take for instance, Japan has approved its 23rd crypto exchange, while Malaysia also has approved similar crypto exchanges for the operators. Look at Singapore, for instance. We have their monetary authority has granted a sort of a temporary um, exemption, from for it's temporary exemption for holding a license in cryptocurrencies rather. And this it's a sort of a month, a grace period for them. And you've seen companies such as Luno, Binance, and Coinbase, they've taken advantage of this regulation to also come on board and provide the platform for investors in those territory to make investments in this asset class. So like I earlier said, the regulation vary from country to country. Globally, just about 10 countries that have really made public announcements to that effect in terms of regulating crypto asset. I think Nigeria also, in a way, we've joined that league also, and we look forward to more of this. And I think this would really provide a sort of confidence and comfort for investors or for the retail investors when you get a sense that the asset or this commodity in quote has some sort of regulation around it compared to where there is no regulation and you're at risk of 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 of, of the market really.
All right, thank you very much, Biodu Keribe, Head of Research at AfriInvest. Well, we hope to also get the Securities and Exchange Commission to explain this regulation further. All right, let's now cross over to the equities market with Temple Ashaju. Well, Temple, we talked about cryptocurrency some time ago, and you said it was for small boys like you. It's not, after all.
Let me just say, we hope we'll be reporting cryptocurrencies on this board going forward.
Absolutely, absolutely. So anybody can play.
Absolutely. I appreciate that, Chibeze. Great to know that. Okay, so in the equity space, we're enjoying some bullish sentiment. Green is the color of the week for us last week. Was the color of the week last week? And we do hope that green will remain the color of the week for this week as well. Because again, we jumped some 2.92% week on week last week, thanks to what we're saying, thanks to the central bank that actually reduced the monetary policy rates by 100 basis points from 12.5% to 11.5%. And of course, the DMO has now shrunk the yields at the debt side of the market. And that informed the reason why we're seeing the push and the interest in this space. Now look at the volume of transaction, which jumped by a whopping 62%. And that represents some huge billions of naira compared to what we did in the preceding week. The volume of transaction was up some 62%. The value of the transaction, which we had at 20.55 billion naira, was actually up by some 37%. That tells you, because again, we have some huge elevated liquidity in the system, which is what we're also likely to see this week. Because again, recall that from last week through to this week and all through to the end, we're going to be having some of the tier 1 banks paying their dividends to investors, and that is going to help a lot of investors to reinvest what they have into the market. Equity remains the toast of the capital market, the financial market at large at this point in time. In the fixed income space as well, we're going to have some maturities to around 120 billion naira. We're also going to have some payments, coupon payments in that space. Folks are not considering putting these funds in the 3% or 1% or even less than 1% yield that you have in the T-bills and OMO side of the market, except maybe for the bond side of things. But then a whole lot of that fund will come to the equity space. So this is what is informing what we have in the market at this point in time. For the volume of transactions, Sterling Bank, FBN Holdings, and of course Zenith Bank were the key major contributors. They are the volume shockers for the market last week, and they account 612 million units of the shares actually accounted for some 30-something% of what we have here. Then if you look at the value of the transactions, they also accounted for some 4.311 billion naira worth of transactions out of the 20 billion naira that you have here, and that represents some 20.97% of the entire transactions that we had in the value of transactions. Now let's move on to the sectoral performance, where we have the banking sector, which is up by some 3.59%. Say thank you to Fidelity Bank, which is up by 6.7%. We also got Guarantee Trust Bank, which is up by some 6.5%. And so if you're a holder of equity in Guarantee Trust Bank now, you should be watching the numbers costing close to 30 naira. And that tells you that some liquidity is in for you very, very soon. Quite a number of banks here also jumped. For the week, FBN Holdings, I mentioned earlier, Sterling Bank saw a lot of buy side last week. And of course, Zenith Bank enjoyed some buy side. And we do hope the Zenith Bank will touch the 20 naira mark that it had actually been. So we're going to be seeing some kind of correction in the markets, resistance support levels will be changing for a lot of the stock market prices or shares in the market. Let's jump to the consumer goods side of the market. Flour mills was up by about 8%. We got Nigerian breweries, which went on bid, for a greater part of last week, was up week on week by 25%. For those that had actually bought Nigerian breweries at 42 naira, now you should watch the number again. Go check it out. It's around 50-something naira per share at this point in time. Recall that Heineken is buying more and buying, is increasing its holdings in this particular company, and that also fueled some of the reasons why we're having this. Industrial goods side of the market, 15.2% gains for WAPCO. Dangote Cement was up by 3%. And of course, insurance side of the market, Cornerstone was positive for the week. It got some real support level in that space. And a couple of other insurance firms. Then you have oil and gas, Seplat. Actually, should be given a thumbs up for the performance that they have for the week, around 3% plus in the market. And that's informed the reasons why we have all of this green color in the market. Let's join Mr. David Adonri, who is a stock trader with High Cap Securities. Mr. Adonri, good morning. Thank you for your attention on the show.
Thank you, Temple. It's a pleasure being with you this morning.
Great. So, elevated liquidity in the system this week across the debt and, of course, the equity side of the market, because you're going to be having some companies paying dividends to investors this week, down the line as well, beginning from last week. What are your expectations for share prices this week?
Thank you, Temple. You know, Nigeria is pursuing an expansionary monetary policy on all fronts now. While interest rate is being forced down and loan-to-deposit ratio is being increased, fiscal stimulus will also put more money into the economy. And so due to the low absorbing capacity of the economy, all these will principally flow to the forex and equities market. The redemption of matured bonds and the low coupon rate on new issues will exacerbate migration to equities and forex. Absolutely. And so if the companies are also paying dividends this week, all these will increase the liquidity in the market. However, the sustainability of this expansionary monetary policy depends on how negative the impact will be on inflation. So as it is now, equities is the toast of the market, but how sustainable it will be, time will tell.
So basically, you're telling investors to invest cautiously, is it?
Yes, they have to be cautious because, we are heading into a stagflation. And stagflation is usually not very, very conducive for the market. But they can actually enjoy the ride of what is happening in the market now.
What does the trend in the market at this point tell you about Q3 numbers that will be coming any moment from now and next week from a lot of these quoted companies? Because again, Mr. Adonri, if you look at the last 3 months of the year, we have actually seen some traction in the equity markets in particular.
Yes, the equities market has been coming up because of the gradual opening of the economy and the belief that the economic activities will normalize. But however, we have seen the recent resurgence in COVID-19 globally. This may still negatively impact the economy. And we are also anticipating that Nigeria will enter into a period of stagflation. And so these are all factors that will depress corporate earnings and may ultimately, at the end of the day, reduce the payouts. So whoever is actually investing now is looking more into the future and also taking advantage of the decline in the prices of equities and also the low interest returns on bonds. So these all favor the market now, but returns will become meaningful in future, not immediately. So the market is a terrain for long-term and strategic investors now.
Great. Mr. David Adonri, stock trader with High Cap Securities and a member of the Nigerian Stock Exchange. I appreciate your analysis. Thank you so much.
It's a pleasure. Thank you.
Great. Thank you. Chimuzes, back to you.
Temple, my mind tells me that there will be some kind of profit taking, this week, considering the bullish run we saw last week. And of course, that buttresses what Mr. Adonri just said.
Correct.
Anyway,
Because again, if you look at the RSI, the relative strength index of some of these numbers or counters, they've actually increased. So that may actually set in any moment from now, but it
in any
doesn't
case,
erode the possibility of re-entry.
but you never can tell. You know how it
Agreed.
is in this market.
Agreed. That's
All
why they
right.
said we should invest cautiously.
Hang in there, Temple. We'll take a break
Right.
and come back to you after we go to London. Refusing to self-isolate when told to is now illegal in England from today with fines of up to 10,000. Let's hear more from my colleague in London, Juliana. Good morning, Juliana. A beautiful week to you. Well, from today, it will be a punishable offence not to comply with an official instruction to self-isolate with fines starting at £1,000 and rising to £10,000 for repeat offenders or serious breaches. What are the modalities in place to ensure compliance?
Well, what the government are hoping is that it will be people. It will be people dobbing in their neighbours or dobbing in people that they don't think are doing the right job. And this has actually caused a little bit of controversy today, particularly on social media and amongst local media networks. A lot of people don't feel happy that the government are trying to push the responsibility on and the blame onto other people to make sure people are doing what they're supposed to be doing. But as Prime Minister Boris Johnson said in his address to the nation last week, Tuesday, it is all on us. These new self-isolation penalties do kick in today, as you said. If you are an offender, you first of all get fined £1,000. A repeat offender can be charged up to £10,000 and face penalties. And that would only happen if you have downloaded a track and trace app or you are coming back from a high-risk country, or just in general, if you are told to self-isolate and you're not doing so, you will be breaching the law. This obviously is coming as COVID-19 infections are really surging in England. There are talks that there could be further lockdown restrictions coming to certain regions later on this week. But, you know, over the weekend, there have been some pretty raucous scenes, people not taking these measures seriously, people, congregating with more than 6 members of their household or more than 6 people. And so the government do believe that this is the only way that they can stop that. And by the way, the track and trace app, which was supposed to be world leading, which was slightly delayed, has now been downloaded by 10 million people, including myself, by the way. So the government will hope at least that that can also stop the spread.
Interesting. Well, Labour has criticised Chancellor Rishi Sunak's new job support scheme. Labour accusing him of consigning 1 million jobs to the scrap heap. What is their grouse this time?
Well, the Labour Party are not happy because they believe that in Rishi Sunak, the Chancellor of the Exchequer's winter economic plan, he failed to address the millions of people that work in sectors that have either been closed since the beginning of lockdown in March or will be suffering due to the restrictions of closing at 10 p.m. or reducing the amount of people that can sit together. For example, in weddings, according to the Office for National Statistics, about £4.9 billion has been lost from the wedding industry this year. This obviously, it doesn't just affect the people that own the venues, it affects caterers, it affects people that are selling clothes. I'm sure in Nigeria there are a lot of people that have suffered because of these reduced numbers. And the government just don't, the opposition party just don't feel that Rishi Sunak has gone far enough. The main sticking point out of last week's announcement, of course, is the job support scheme. This will replace the furlough scheme, which is ending on the 31st of October. So from the 1st of November, you will be paid a third of your wage by the British government for working part-time. But the Labour Party are pointing out that so many people just won't be able to afford this, including people that also work in nightclubs. Nightclub venues haven't been opened. Theatres are still struggling to open. We have a season here in the UK called Panto. It's like theatre, but a bit more slapstick. It involves children. And typically during the Christmas period, Panto season can really see 50 to 60% of your earnings. It's looking likely to close. So they're asking for more support from the government. And those calls have also been backed by the former Prime Minister, former Chancellor himself, Gordon Brown.
And it's a brand new week. Aside from data, what else is on the radar for markets?
Well, of course, COVID is going to dominate sentiment as it has since the pandemic began. There are discussions that London may actually go on increased lockdown measures as COVID-19 rates are climbing out of control here. So we are expecting an update from the Mayor Sadiq Khan or Prime Minister Boris Johnson later in the week about what would happen to London. And of course, Brexit. Brexit is back in the spotlight. Michael Gove, a cabinet minister, he's off to Brussels to kickstart another round of talks. We've got 2.5 weeks until that Brexit deadline looms. On October the 15th, there is a summit amongst EU 27 members. And the Prime Minister did say that he wanted a deal to be struck before then. Of course, the internal market bill, which will kind of rip up international laws, is going to be debated by fellow MPs tomorrow in the House of Commons. It's likely to be a showdown because we know already that some Conservative backbenchers are not happy with Prime Minister Boris Johnson, including the former Prime Minister Theresa May, who seems to make it a mandate to make sure that there's a U-turn in this internal market bill. So lots going on. And of course, Thursday marks the beginning of a new month, so lots more new data.
Absolutely. I guess we have quite a lot to chew in the course of the week, but we will start off with an update from you later in the day, Juliana.
Thank you.
And back to you, Temple.
Yes, Chimeze. So let's quickly look at the unlisted securities market, which was positive by 1.74% last week. We've got the market capitalization back up to 538.12 billion naira. Last week only, we had 12.19 million units of shares traded. And Union Bank Properties actually accounted for a larger portion of this. 10 million units of its shares was traded in this space last week only. Food Concept also had some 2 million units of its shares traded for some 1.35 million naira in the market. The value of the transactions, 26.03 million naira in the market. And of all of this, Food Concept had 1.3 million. And of course, Union Bank Properties, which is a real estate company, had accounted for some 12.6 million. And then the rest went to the likes of WAMCO, NDEP, CSCS, and some of the major players that you have in the market. So look at these figures. They actually represent the numbers for Thursday last week. But if you look at the week-on-week performance, we know that we had some bond auction last week. And that's for the reasons why investors came back to the market. Dealers actually came back to the secondary side of the market and purchased some of the bond auction papers in this side of the market because, again, they were not able to actually lock in their position at the auction. But we have Benga Shonaike joining us on phone now. He's a fixed income dealer with Access Bank. Benga, we understand that there'll be some OMO maturities this week. There will also be some coupon payments, I think, in the range of 45 billion naira or thereabout. How will all of that change the paradigm for the week?
Hello, good morning.
Good morning, Benga Shonaike. So we know that there are some maturities coming up. This is OMO maturities of around 120 billion naira and some coupon payments of some 45 billion naira. How will that change the paradigm for you? Okay, can you hear me now? Is it better now?
Slightly better, yes, please.
Okay, great. What are your expectations for the week, given the maturities, OMO maturities, and coupon payments that you're expecting this week?
Okay, thank you for having me. So in terms of the OMO and coupon payments, that's a lot more liquidity to the system. Coupon maturity is about 50 billion. So what we expect to see is that a bit of buying sentiment. Given the drop in NPR last week, we expect that this should spur a bit more interest at current levels, because what had happened previously was people were a bit skeptical at the current levels, single-digit levels, especially for 30-year instruments. But we expect that people will take a second look at this instrument right now. That really they have no choice, and we'll see more demand in the coming days. And we expect more demand, especially on the bond side. The Treasury bill size for 90 days is already 1%, so I'm not sure how low that can go in the moment. But we expect more demand towards the longer end of the curve, specifically the bonds, and people will probably more look to invest at that side.
All right, Ben Kashonaik, a fixed income trader, a dealer with Access Bank. Thank you for your analysis. And let's hope that you get some more outlets that you can actually reinvest some of these maturities and coupon payments. That's it, Chimeze.
Thank you, Temple. Well, Nigeria will be 60 this week. Let's go with that optimism that things will be better.
Absolutely. Good luck for Nigeria.
Absolutely. All right, that's it on the program for today. Thank you for watching. I'm Chimeze Obi Iwago.